Average daily range over close is one thing that we look at over time. You see it is at 0.005 or 0.5%, half percent in 3/4. So pretty low. I put a yellow line at 0.5% of the daily range. So basically the range of the day, the high minus the low, is divided by the close. And so, for example, a 1% move on the S&P at 3,000 would be 30 points. Half of a percent range would be a 15-point move. And this is the .D symbol. In TradeStation, you can use @ES.D on the daily charts, and that just shows the data from 8:30 a.m. Central Standard Time to 3:15 p.m. Central Standard Time, and it's the day session only. And so the range expands when you use the night session. Let's look at the @ES. So I'm going to format the symbol, and you can see that the range expands 0.964%, almost 1%. So it's interesting, in the last 5 days, half the range is half during the day of what it is during its 24-hour session. And so it's typical. We see moves at night, choppiness during the day, but we are moving back towards ranges. Back at the end of 2020, do you remember how the market kind of melted up like this from October of 2019 all the way to the pandemic in 2020? And then back in 2018, kind of a similar thing happened. In 2018, we had the market melting up like this, and then on January the 29th, this volatility occurred all the way to 2019, through the end of 2018, and then the Fed changed its position on interest rates. Market went higher, a little bit of a sideways price action, and then the market moved higher, and we had the pandemic, and then the Fed came in here at the bottom of the pandemic, and it's kind of gone right straight. It gets to that. The ranges get narrower as the market just moves up and starts to act more like a fixed income investment. And so that's what we're looking at. Ranges are back here. The overnight ranges, 24-hour session ranges, as well as the day session ranges are approaching these moves where it just melts up. You see it'll stay there for a while, though. It can stay at these low ranges. It melts up and then it crashes. And so that's the cycle of the market. We are probably a little bit of ways away. It probably has to melt up more based on the past. If it does what it did in the past, it stayed at these low ranges for a long time, melted up violently, and then crashed. Melted up here. Pandemic caused a crash. And so these are some things to consider in your trading if you're going to try to call a top. I know that yesterday Interactive Brokers owner, founder, president Thomas Peterffy said that his clients are net short for the first time in history. And so I don't know if there will be some efforts to cause short covering now, but the market could still melt up further. It could come down at any point. It could correct at any point, at least a 10% correction. But based on what we've seen in 2018 and 2020, in these time periods, this market will come down here and hit this 0.5% for a while, and it hasn't quite hit that 0.5% yet. We are at elevated volatility levels. So I wanted to share this average daily range over close analysis with you on the @ES. I'll show you what the easy language looks like. Here is the easy language. Plot 1, average of high minus low the last 5 years divided by the close. And then plot 2 is 0.005. And that is a simple, easy language to get this plot on your side. You can also take a look at it on weekly and monthly charts. Interesting analysis to see these range and volatility and directional patterns related to range.